All right, so good evening, everyone. Welcome to this session on the capital market, a session that World Health 2.0 has put together to enlighten members of our community on the incredible opportunities in the capital market. All right, the incredible opportunities in the capital market and how to leverage it and really grow wealth for yourself. The whole idea is, as you're making profits from the Forex market, set aside a certain percentage, invest in the capital market so that your money can be working for you. Invest some in real estate, and that's how you begin to build wealth gradually. When you look at someone like Warren Buffett, he built incredible wealth from the capital market. Why was he able to do that? He had knowledge, he had understanding. So tonight we have an expert in that field, Mr. Fidelis, who is a seasoned Forex broker, well-learned and well-enlightened, well-informed in this industry. He will be taking us through what is currently happening in the capital market. He will be giving us suggestions on at the end of today's session. He will be giving us suggestions on what shares we can buy now. If it's 100K you have, if it's 200K, if it's a million, whatever is comfortable, just make sure that you're setting aside a certain percentage of your profit, of your income, and start diversifying. All right. So with that being said, I'm handing it over to our facilitator, Mr. Fidelis. You're on the call. You can go ahead and unmute yourself and get started. So everyone on the call, you're welcome. Please put 222s on the chat box as I hand it over to Mr. Fidelis. 222s on the chat box, please, everyone on the call. So Mr. Fidelis, please unmute yourself and take it over from here.
Good evening, everyone. And I say Happy New Year to all of us. Today is our first lecture for this year. And an interesting lecture as well. How do I make money in the capital market? Lecture number 6. We center today's lecture on how to analyze securities, how to analyze shares, bonds, and all that. In the capital market, we have 2 schools of thoughts. One, we call them the fundamental schools of thoughts, fundamental securities and analysts. And the other one is the technicians or technical analysts, or sometimes we also call them the chartists. Today, we are going to address the fundamental school of security analysis. Fundamental security analysis, they look forward, whereas the technicians, they look backward. That's the major difference between 2 of them. The fundamental look forward and the technicians look backward. And I can tell you that all over the world, about 85% of analysts are more interested in fundamental school of thought, whereas 15% emphasize the technicians. So today, let us address the fundamental school of thought and see how they do their business. First of all, we look at what is called, not I, but what is called the intrinsic value of a share. That's number 1. Intrinsic value is said, it is believed by the fundamental school of thought that every financial instrument, every financial asset has intrinsic value. To them, it is defined as the true net worth of a security, the true economic worth of a security, true economic worth of a security. And it is for them to find out the true economic worth of a security. True economic worth of a security is said to be the future earning, the stream of income expected from that particular security, discounted by appropriate risk-related interest rates. Risk-related interest rates. Sometimes it is mathematized, but for our level, I don't think we might need to mathematize it at this stage. But then if you want to explain that a little bit further, when you buy stock or shares, what you benefit include dividend and capital appreciation over time. Then you have to discount that by the risk-related interest rate. What I mean by that is that the average investor is risk averse. That means he does not like risk. And if he's going to bear risk because he has alternatives, then you have to compensate him adequately for the risk he's going to bear. Because he has alternative, he can actually invest on riskless assets such as government bonds. But if it's going to securities like shares and the rest of them, that means he has to be compensated for that. That's what we're talking about, risk-related rate of interest. So the intrinsic value comes up when we look at the share price of particular security. Now, prices are influenced by anticipation. Whenever there's anticipation, whether positive or negative, it affects the price of security. And this anticipation is driven by information, new information. Take, for instance, in the capital market today, it is assumed, or the anticipation is that many companies will do very, very well this year. The year has just ended. And as such, you see price of shares moving up. It's just an anticipation. Actually, we've don't know whether they're going to do well or otherwise, but that anticipation is moving prices up. And this the anticipation comes up because of new information. Now, the fundamental analysts are arguing that supposing there is a mismatch between the actual price of shares at this particular time in relation to the intrinsic value, what will actually happen? The price may change. There will be difference in price. And that is what the fundamentalists like capitalizing on. Take, for instance, if we have Liver Brothers selling for 40 naira, and based on the analysis, they believe that Brothers' actual price, that is intrinsic price, is supposed to be 70 naira. They will go into the market and begin to buy Liver Brothers because it's selling for 40 naira, which is a lot cheaper than the intrinsic value. But if on the other hand, Liver Brothers selling for 40 naira, and based on the analysis, the interest value is 20 naira, they will sell Liver Brothers shares and take advantage of the difference in price, because definitely the price will come down. And when it comes down, they may want to buy subsequently. So they will increase the quantity of shares they have at the end of the day. That's the argument of the fundamentalists. So oftentimes, they search for the intrinsic value of a security. Now, these things are driven by three major factors. The value of a particular company they analyze are driven by two major factors. These factors, we call them the investment environments. The investment environment include the state of the economy, the industry they are operating, and the particular company they are interested in. The state of the economy is very, 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 very important because companies don't operate in a vacuum. They operate within a given environment. And the importance of analyzing the state of the economy is that if it determines the kind of shares you want to buy or the kind of investment you have to make, either real assets, short-term or long-term assets, or even stocks and shares. The state of the economy determines that so much. And even at then, you also have to analyze them to find out which of the industries benefit most in the state of the economy. If it is a particular industry, for instance, the banking industry is benefiting more, then you can shift your investment to that area, that particular industry that is benefiting more. If there's a particular industry that is not profiting so well from the economy, the tendency is for you to withdraw your investment from there. I will give a good example. Some years ago, maybe a long time now, there was a time government banned the importation of wheat. So wheat milling companies were terribly affected. In that case, you can move your investment away from the wheat milling company, because definitely the performance of the companies or the industry will be pretty low. Recently, government banned the exportation of timber. So if there's a company that is listed and they're into timber exportation, definitely they will be affected. So if you have an investment in that area, you have to move them. That's just sort of, we're talking about the state of the economy. Now, when we analyze the state of the economy, we look at them from three angles. The first one is leading. These are indices that will determine how the economy is performing. We have the leading index, and then we have the coincidental, which is 2, 1. If you look at my cursor there, coincidental is there, and then you have the lagging indicators. You can call it indices or indicators, whichever one you want to use, kind of. So let us take the first one, the leading indicators. Leading indicators will tell us what is going to happen in the economy. It is not happening now, but it's going to happen in the economy. It's a signpost telling us where we are going. The coincidental indicators are the things happening in the economy presently. And then the lagging indicators come after the coincidental indicators. They will come in much later. Now, let's look at the leading indicators. First of all, we look at the fiscal policy. Fiscal policy tells us about taxation, government expenditure, as well as borrowing. It's interesting to note that so much debate is going on taxation presently because there's a new tax policy that has come into law. And I can tell you in Nigeria, it's been implemented already. We don't have choice. The issue is that we ask ourselves why, because so many of us have not even read it. We have not even read it, and we are a bit jittery. And people are making all kinds of insinuations about the tax laws and that stuff. But I can tell you, I don't think there's anything so fundamentally wrong with it. I'm not an apostle of Tinubu, but I can tell there's something so fundamentally wrong with it. First of all, let us look at it from this angle. What the policy is talking about is to bring more people to pay tax. That is to widen the tax net. That's what that policy is talking about. Bring more people to pay tax. It may surprise you to know that people who pay tax mostly in this country are the poor people. The poor people, when they talk about direct tax, for instance, personal income tax, you find that about over 90% of those who pay personal income tax are poor. So the government is saying, let us expand the tax nets and then bring more people to pay tax, because government require it for the job they want to do. If they're going to grow the economy, that's the essence of the whole thing, to grow the economy, to control inflation, and also check recession in the economy. So that's basically what the tax and fiscal policy is all about. Now, when we talk about this, we now look at, is it progressive? In my opinion, it is progressive, because it's saying that those low-income earners may not even pay tax. Those in the very low-income earning may not even pay tax. So it is the richer people who is supposed to pay tax more, to have a semblance of balance and ensure equity in the system. That's basically what they are doing. And some of us are so worried about the tax thing and how it affects us. Now, looking at from the capital market point of view, it's not affecting the poor. The ordinary person, unless you have a capital appreciation of about 10 million, you want to withdraw, not that you invested, but you want to withdraw from the capital market. It's only then you talk about tax. But I've mentioned earlier, there's something we call a tax avoidance and tax evasion. Tax avoidance is legal. Tax evasion is illegal. Now, even for the big people, high net worth individual and corporate bodies, there are ways one can avoid tax paying. Take, for instance, the law says that if you want to withdraw as much as 150 million naira in a year from your investment in the capital market, you have to pay 25% tax. Now, let us look at it mathematically. Instead of me withdrawing 150 million, what's starting from withdrawing 149 million, and I don't pay tax at all to government? That's what we call tax avoidance. It's legal. There's nothing wrong with it. But if I'm going to withdraw 150 million, the implication is that my tax, the tax alone I'm going to pay is about 7.5 million. So I will go home with about 112,500,000 naira. So I'm better off if I withdraw 149 million and I don't pay tax alone, and I'm going on 149 million. So the point I'm making is that tax avoidance can be used to maximize your return. But it takes one who is knowledgeable to appreciate some of these things and then be able to make most use of it. And then talk about government expenditure. We should be concerned about where government is spending its money. If we know where government is, particularly knows where government is spending its money, then we should be able to invest in that area because we take advantage of that money that's coming to that industry and see how we can scoop something out of it in terms of dividend and capital appreciation. Then the next one, let us look at the monetary policy. Monetary policy is carried out by Central Bank of Nigeria. The essence is to, first of all, check inflation. Check, that's number 2112, monetary policy. We want to check inflation, check forex. That's naira in relation to foreign currencies, just such as dollar and pound. And at the same time, ensure economic growth. They do this in various ways, principally by controlling the money supply. It's also used to check inflation. You control money supply. These things are done through what is termed open market operation. Open market operation is when central bank choose to either buy or sell their securities. Either buy or sell their securities to the public. Presently, what they are doing is what I call, what is considered as contractionary monetary policy. That is, they withdraw money from the system. That's one of the ways they have been using to check monetary policy, to check inflation in the economy. If you go through what's going on in our system, in our economy presently, you find out that inflation has been so adequately checked. As of today, inflation is about 15%. It's about 15%, which is pretty low in relation to what it was last year when we were talking about 27% and all those kind of stuff. They've been able to check it through this open market operation. They can as well do it by interest rates, or what we call discount rates. Interest rates or discount rates, the banks they borrow from the central bank. And whatever interest rate central bank charges them will determine how much they are going to pay to others. Determine how much they are going to pay to others. So if the interest rate is high, the likelihood that the investors who will come, borrowers, will definitely have to pay higher interest rates. And if it is low, they will now have to pay lower interest rates. So they use that one again to check the money in circulation, supply of money in the system. Besides that, there is something we call reserve ratio. Central bank makes a policy. Each bank will keep a certain percentage of money that is deposited with them into a reserve ratio. They don't give out those particular sum. In Nigeria here, reserve ratio for commercial banks is 45%. In merchant banks, it's 15%. So they can increase the reserve ratio. When they increase the reserve ratio, the amount available for banks to give out as loan will be lower. But when they lower the reserve ratio, the amount they will not make available to the commercial banks will be higher. And in turn, the commercial banks will have more money to loan out. That is the essence of that. So they check these things, and we have what we call a monetary policy committee. They meet every month and they chunk out decision of the monetary policy committee. It's important to get to know them. It's going to help you as well. Then we move to GNP, gross national product. Gross national product. Gross national product is said to be the aggregate of goods and services produced in a country within a given period, usually 1 year. It is monetized in monetary terms. Aggregate of goods and services produced in a country within a given period, usually 1 year. It is used to assess where the country is coming from and where it is presently and where it is going. In the time past, when the economy was actually low, our GNP, or sometimes use most times in Nigeria, we use GDP, that's a gross domestic product. It used to be in the region of 3 point something, as at now it's over and above 4%, kind of thing. And it's bound to grow. According to International Monetary Fund, they have given us, say that Nigeria can grow this to about 4.4%. But I have a feel that we can do as much as 5% this year. So it's a pointer to the fact that the economy is improving and we are doing a lot better than what we have done in the time past. Then we move to consumer spending. I have a challenge here. Let me warn that much as we want to get the data and statistics as regards all this, in developing countries, sometimes some of this data are not readily available, unlike what happens in the developed country. So sometimes we rely on what I consider as guesstimates. But joyfully, there are so many things we can rely on outside some of the ones that cannot be immediately made available to us, like the consumer spending. Actually, when the consumer spending is growing, it means the economy is doing well. That's the implication. But when it's going down, it means we're having challenges. So it determines the kind of investment one has to make. Then the next one is stock prices. Stock price is also a factor. When stock prices are rising, the interpretation is that in the next 9 months to 2-3 years, the economy will continue to grow. But as soon as the stock prices are going down, the implication is that in the next 9 months or 2-3 years, the economy will definitely go down. So it's a kind of it's an index, it's an indicator of where the economy is going. Then let us move to coincidental indicators. Coincidental, that's what's happening in the economy now. The GNP is also at constant and real terms. It's also a factor that's also considered. They come in leading and they come in as coincidental because they are happening now presently in the economy. As of today, I think we are still very, very comfortable. We are growing. Let me put it that way. And I'm proud of that. Then let us, industrial production. In the developed countries, you can have data, statistical data, as I will tell you about industrial production. In Nigeria here, I doubt if we have it. But then, by my intuition, I can tell you that industrial production is rising. Industrial production is rising. Factories and industries are busy. Some of them are going up to 100% of their installed capacity. That means, take for instance, I think, was it a week or 2 weeks ago, Dangote mentioned that they are trying to do some adjustment because they are producing maximum capacity. And just as Dangote, many other companies are also experiencing that. So industrial production is rising. That means the economy is doing well. And then we look at unemployment. Now, the snag we have about is that I do not believe there is any organization in Nigeria presently that can tell us the level of unemployment. What they do is just an approximation. In the time past, it was the Ministry of Labor to collate information about unemployment, particularly for the low-income earners. It was a crime in Nigeria that you employ somebody without going through Ministry of Labor. On the basis of that, they're able to capture the unemployed ones because on monthly basis, they render returns to that effect. But presently, I doubt if the Federal Ministry of Labor is doing the same thing. They used to have employment exchange. People come there to register, and companies come there to recruit. But presently, it is not done. So it is a challenge we have in the country. But sometimes they come up and chunk out unemployment rates. But I sincerely don't believe because it's based on an approximation. Then we look at a producer's price index. The producer price index is different from consumer price index. Producer price index is the prices that affects producers. That is things used in producing further goods. How much it costs them to produce further goods. Producer price index, try to find out the level of inflation. Is it affecting them? Because if it's affecting them, they will definitely push the price to the end users. They will push the price to the end users. So that's why it's very important. Producer price index, again, I don't know, but I doubt there's any organization in Nigeria that's able to capture that effectively. It's still a problem. Corporate profits. Now, corporate profit, it is easier to assess. Now, for the listed companies, they send quarterly report of their performance. We are expecting the last quarter now, but they've sent the one of first quarter, second quarter, and third quarter. So and it's published, is made available to the public. So if you have followed that closely, you will agree with me that corporate profit has been increasing, particularly with the listed companies. It's not in contention. Virtually all the companies are chalking out profits, higher profits than what they have done even last year and year before last. So I believe corporate profit is actually doing very, very well. There is a sign that the economy is doing well. The economy is doing well. So it will tell us again where we can invest. Then let us look at lagging indicators. Lagging indicators are things that will come after coincidental indicators. The first one there is the prime rate. The prime rate is the rate at which banks are prepared to loan money to their very credible customers, very reliable customers they are very sure of. It's an indicator of what is happening, the level of confidence they have, not only on the customers, but on the economy, because the economy is not doing well. The customers may not as well pay. So it's very, very important to them, the prime rates. And if the prime rate is going up, that means the banks are apprehensive. But if it's coming down, that means the banks are comfortable because they know the particular company or those they grant the loan to will definitely pay them. And then let us look at consumer price index. That is inflation. Inflation is an important factor. First of all, if there is inflation, it's difficult to plan. Family units find it difficult to plan when there is inflation, and they buy at a higher price, and they will begin to cut down on the level of things they are buying. But presently, it's been checked. Like I said, as of today, the report we have is that it's 15%, which is considerably low. But if you want to assess and be sure if the inflation is going down, you may make inquiries from those who go to the markets. Those who go to the markets and buy things, they can confirm that inflation is is being checked presently. In fact, some of the things, particularly even foodstuffs, are going down much lower than the 15% that's been reported. Much lower than 15% that's been reported. Then the next one is commercial papers. Commercial papers are issued by big organizations. The investing public have confidence in them. Big organizations such as maybe Nigerian Breweries, Liver Brothers, Cadbury, and a host of others. Now, the essence of it's a short-term debt instrument. It's a short-term debt instrument, and it serves for just about 30 days, sometimes 90 days, but at most 270 days. At most 270 days. And the essence is that instead of going to bank to borrow, they issue these things and then to the public, and the public can actually buy them, and they use them for their short-term investment, short-term, trying to make up for whatever is lacking in terms of finances at a particular point in time. Now, if the commercial papers are even issued and people are having confidence to purchase them, it's an indication that the economy is doing well. But if it's issued that people are not buying them, that means people are skeptical and the economy may not necessarily be doing well. The next one is capital expenditure. Capital expenditure is, amounts companies invest on capital goods used for further production, such as plants and equipments. By the time there is an increase in capital expenditure, it means the company is doing well. That means whatever they have is not adequate. It's not enough for them. They are looking at something higher. They have to expand. That's why we talk about capital expenditure. It tells you where the economy is going. It tells you where to invest as well. And then we look at the significance of
Situation back come up. Where Michelle?
Can I continue? Okay, significance and interpretation of economic indicators. Significance and interpretation of economic indicators. Now, the issue is this: for instance, one of them is a GNP. The GNP is going to tell you where we are coming from, where we are, and the projection. And that will tell you the kind of investment you have to put money into, where you have to invest, short-term, long-term, securities, or real assets, whichever one you want to do. That will give you an idea of where you are going. There is something, it's not in the textbook, but I think it is important we take it into consideration. And I'll give my reason for that. That is foreign direct investment. It's not one of the indices or indicators, but to me, it's supposed to be one of the indicators. My reason for that is that foreign direct investment, first of all, those who are investing outside the country, we have confidence. They are profit maximizers. They want to make money, more from their money. They are profit maximizers. They are not charity organization. So they want to look at it, and they have alternatives. It's not only Nigeria, there are other countries where they can invest. So if they look at a particular country and they are comfortable with that country in terms of security of their investments, in terms of return to their investment, they will go and embrace that country. In Nigeria, it's been on the rise. That will tell you, it's an indicator that even foreigners have confidence in our economy. So I think it should be brought in, but it's not brought in. But this is my own interpretation, this is my own understanding. I don't know. It may not be applicable to developed countries. One thing is that sometimes the textbook we read is about developed countries. So they don't consider foreign direct investment as anything, because America, they are comfortable with whatever that's been invested from within. Britain, maybe the same thing, developed countries, but less developed countries, we should be particular about foreign direct investments. I think it is very important as well. Then we look at housing. If there is increase in housing, that means the economy is doing well. If the economy is doing well, there will be increase in housing. If the economy is not doing well, there will be no increase in housing. But today, I can tell you the economy is doing well, because in Lagos, housing is even a challenge. I'm in Port Harcourt, I hear that one bedroom flat in Lagos costs as much as 2 million, 3 million naira. That means there's deficiency in terms of housing for people. So people are investing even in housing because they know they are going to make money. So if there's increase in housing, that means the economy is doing very well. We also look at the balance of trade and balance of payments. Balance of trade and balance of payments, if it is positive to our country, Nigeria, that means we are exporting more than we are importing. We're exporting more than we are importing, which means we have more money to ourselves than what we give out to people where we are importing the products. So it is also very, very good. And for Nigeria today, our balance of trade and balance of payment, they are favorable. They are favorable, and it is good for us, and it's good for our investment. Now, let us look at some industrial analysis. Like I said, there are three of them: economy and the industrial analysis and the economy analysis as well. Now, let us look at industrial analysis. Industry, as a matter of fact, is a collection of interests. Companies with common interests come together, and they are styled an industry. Take, for instance, you look at the banking industry. It's an industry on its own because they do the same thing and attend to the same set of persons. What I mean is that they collect money from people. Those we call surplus spending units. And they loan out money to those who require them, the investors and individuals and the rest of them. So they are grouped together. That's why you have the banking industry. We have like food beverages industry, like Lever Brothers, Cadbury, and the rest of them. They are grouped together. They produce the same thing, go through similar process, and serve the same set of persons. The agricultural industry is another one. Automobile is also one. That's the way industries are grouped. Now, for you to analyze industry, we have industrial growth cycle. That's topic 3.1. Industrial growth cycle. We have the pioneering, right now, and there's the expansion and stagnation stage. The pioneering are those who come into the companies that come into the company or discover something in a particular industry, and they run with it. Let me give you a good example. Companies like who invented the idea of artificial intelligence, we call them pioneers. They come in and they invest so much and they expand quickly and they serve large markets. Prices, they make huge sum of profits at that material time. They can as well go under, no doubt about that, but they make huge sum of profit at that material time. Now, if you're a risk lover, you can go to a company that's at pioneering stage, but you can make a lot of money because at that time they have so much to give out because they're making a lot of money. And along the line, many other companies will start coming in. When other companies notice that they are making a lot of money, like it's happening in AI today, many other companies will start coming in. When they come in, there is a greater competition and expansion takes place. The smaller companies may be swallowed by the big companies. Some may even go under if it's not properly managed. They have a lot of money to even finance development inwardly. Internally generated revenue can be used to finance development and improve on it. This is a stage we call an investment stage. You can invest it because the dividend is obvious. Your investment, you are sure it will not be lost. Unlike pioneering, your investment could be lost if anything goes wrong. But in expansion, you are sure your investment will not be lost. And they pay good dividend, but they may not be able to expand so much. They may not be able to expand so much. Then we move to stagnation stage. At stagnation stage, the particular industry is going down. And if it is going down, they may not be able to do very well as they have done in the time past, and companies begin to collapse. When the economy is even growing, the industry in stagnation stage may even be going down. I'll give you an example. Some of us might be old enough to have used chalk in our kindergarten class. There were companies that were producing chalk. Now, if they relied only on chalk, by now they would have gone under. That's a stagnation stage. Unless they're able to diversify, kind of thing. That's the only time they can survive. Then let us look at the structure. The structure and operational characteristics of industries. Structure and operational characteristics of industries. We are analyzing this because industries affect the economy, affect the company as well. So we need to have a good knowledge of an industry and how they can take advantage of what is going on in the economy. Otherwise, we may not be able to, the industry may not be achieve what they require. Now, first of all, we look at the structure and the states of competition. Then, for instance, we ask ourselves, how many companies are there in a particular industry? Let us take the Nigerian brewery industry. Sorry, the brewery industry. You can count on your fingertips how many companies are involved in brewing in Nigeria. And we also look at the size of those companies, the size of those companies. If I may add, you look at, today we look at Nigerian breweries, Guinness, and international breweries. These are the major companies that are operating in the brewery industry. Some others are still on the fringe and maybe serving regional areas, such as champion breweries. They are still there, kind of thing. But the major market is owned by Nigerian breweries, Guinness, and international breweries. Then it's important we analyze it because the size of the firm determines the chunk of what they will get, whatever drops into that industry, how much they are going to get. And then we look at the concentration ratio and pricing policy. The companies there, where are they located? Like the brewery industry in Nigeria, they are mainly located in southern part of southern part of Nigeria, in the southern part of Nigeria. They're mainly located in the southern part of Nigeria. I don't know, but that's the reality, kind of thing. Yeah, I've tried to visualize, but I cannot remember having on any one of them in the far northern part of the country. I doubt there is any. I stand to be corrected, kind of thing. And then the pricing policy. Are they, among the companies, are they ones that can say, look, I'm going to change my price, not minding, and they will succeed? Or the ones that are price takers, that is, wait for the leaders to change their price, increase their price, and then we can correspondingly increase. Let me give you an example. You see, if you look at beer, Nigerian breweries can comfortably increase the price and stand by it. It's only then that other companies can now think of increasing price. But if they increase their price over and above Nigerian breweries, they will be out of the market. In the stout industry, Guinness does the same thing. Guinness can afford to increase their price and stand by it, and they will still succeed before others can follow suit, sort of thing. The nature of product and state of competition, nature of product, the point I'm making here is the product homogeneous, or are they differentiated? It's important. Brand name is also very, very important, kind of thing. Products that can serve as a substitute the other ones, that's when I say homogeneous. And then the state of competition. What's the state of competition in that particular industry? This is determine the level of advertisement. There are level of competition, determine even advertisement and the rest of them. How do they come in? They have their strategies of competition. I'll give an example in the brewery industry. You see, international breweries, if you watch, they have similar products like Nigerian breweries, quality products, premium products, but oftentimes they sell lower than Nigerian breweries because they believe and they have a feel that with that, they will be able to get inroad into the market and make a kill. So oftentimes their prices of their stocks, the beer they sell, is oftentimes lower than Nigerian breweries. The quality is almost the same thing, but the price is different. That's the state of competition you have there. The nature of prospect of the industry. How do we see the industry? Is it growing? Sorry, the nature and prospects. Is it growing? The demand, is it also growing? Because it might tell us if we're going to do a short-term investment or a long-term investment in a particular industry. If it is not growing, then we might start thinking of how to withdraw from the investment in that area. But if it is growing, then we have to, stick to it. Classification, we classify them. Sometimes there is growth, cyclical, defensive, or decline. Growth can continue. After a time, there is a kind of coming down, and it may still go up again and come down, and the rest of them. I'll give an example. The brewery industry, for instance, if you, from their records, it's obvious that breweries usually during the rainy season, they don't sell so much as they sell during the dry season. That means it's cyclical in nature. Particularly the last quarter of the year, they make a lot of money, a lot of kill, But if you look at and after then, maybe if you move on to February, March, April, really setting in, their performance decline. Then there also, we're talking about defensive or decline when the particular industry is also declining. We have to watch that as well. Then we also ask ourselves the major customers, their geographical location, and the determinants of demand. The major customers, geographical location, and the determinants of demand. Now, if I take the brewery industry, if I have the major customers are located in the southern part of the country, maybe on religious grounds, I do not know, but that's the reality. But they are the malt head of it. You find that they sell more in the northern part of the country. And then if you assess the customers, you now find that maybe something like the age brackets, level of income they have, and even gender issues and all those kind of, it might determine the level of, well, it helps to determine the demand for the products. It helps to find the demand for the product. And on the basis of this, they will now know how to market their products. Take, for instance, when you talk about beer, you find that they don't use elderly people or people under age to advertise their product. They normally use the younger ones, and those we call WhatsApp. Those are the people they use mainly to determine their product. Then cost, consideration, and profitability. Cost, consideration, and profitability. When you look at cost consideration, look at the raw material, the finished products, how they are transported, and all that. These are taken into consideration because this definitely affect the profitability. But in particular industry where the profitability is high, then we might emphasize that distribution costs, how much is spent to take whatever to the end user, is also very important. What about rate of increase in labor cost and productivity? Nobody produces without labor. When labor is increased, labor cost is increased, it affects the profit of the company, of the industry generally. So labor cost is also very, very important. How much can we increase the finished goods, finished products? How much can we increase it without having a backlash? That's also very important. And then new capital expenditure. If there is increase in capital expenditure, new capital expenditure, that means the particular industry is doing well. But if there is decrease, because it's only when the plants and equipment are run at full capacity and you think of bringing in more plants and equipment to achieve your goal. So if there is increase in capital expenditure, that means the industry is doing well. Then gross profit margin, okay, the profit margin, let me put it that way. I think I've dealt with this one of the lectures. I don't have so much time, so I may not get into that, but I know I've done it before now, you know. And then look at technology and research. There are companies that emphasize technology, spend quality money on technology and research. There are also companies that don't even spend so much in technology and research. I'll give two examples. ITC presently, you have spend a lot in technology and research if you be in business. Otherwise, you may just go under. But in companies like, let me take example, furniture company, for instance, furniture industry. There is no much, you talk about, not much is spent on research and technology. So it's important to find out the industry that spends so much on technology and research. And if a company is deficient on that, you may decide to stay away. Let me give an example. We remember that when we had this handphone, we had something we call Nokia. Nokia was a market leader, but it's been overtaken by several other companies. They are managing to survive presently because they didn't take advantage of research and technology. And they will look at immediate and long-term look for the industry. If it's something that is gloomy, then we have to stay away. But if it's something that's not too gloomy or that's bright, then we may have to. Let's look at a company and do a little bit of company analysis. Company analysis is very important because even when you invest and look at individual company, how they are performed in the time past, how they are performing presently, and how they want to look at the future. It's of critical importance. Now, the first one is marketing. Marketing is key. Very, very, very important. As a matter of fact, my own personal understanding is that modern companies survive in our society. Marketing and innovation. Marketing and innovation is key. If you don't know market, you cannot achieve your goal because whatever you produce or service you render and the end user does not know about it, definitely you cannot sell. But let me digress a little bit and tell you what my experience sometimes today about marketing. There was a time I was traveling, my children were young then, and we were traveling to the village. And along the line, our vehicle packed up. So we invited the mechanic to fix it. We're out of the vehicle. I just waiting for the mechanic to fix it. And I had 2 kids. They were in primary school, very young that time. And there was this young boy, a young boy of about 10 years old, and he was hawking groundnuts. He came before us and shouted, "Buy sweet, fantastic groundnuts." My little children beseeched me and said, "Daddy, buy groundnut for us." I looked at that groundnut. It's not inviting. It's quite ugly and dirty. But there was pressure on me from the children, and I had to buy it for them. And I asked myself, why did the young boy, make the sale? It's just because he advertised it, he marketed it. There are other granules around, but nobody marketed it. So that's the difference between marketing, when you do proper marketing, and when you fail to do marketing. Then this marketing will now determine the sales, how much of that company sales, the growth of sales and stability. How much of the industry can the company say, "This is my own. This is how much I've been able to make from the sales in a particular industry." Like the breweries, for instance, you find out that Nigerian breweries can determine how much they've made. Greens can determine their own, and then international breweries. And the growth of sales, is it growing over time? If it's growing, then the company can plan very well. They will now know when to bring in more equipment, plants and machineries. And then stability. Stability is also helping in planning. Stability of sales is helping in planning. Then we have what is considered the accounting policy. This is very, very important when analyzing a company. The accounting policy, if it's not properly analyzed, it may not give you a good picture of what goes on in the company. So it's important we look at the company's accounting policy. Now, I'll give you 1 or 2 examples. If you look at inventory pricing policy of a company, there are companies who will price at cost. There are companies who also price at market price. The cost price is a lot lower. It's going to reduce the profit they are going to make. And inventory is a lot higher. It's going to increase the profit they're going to make. If you look at inventory pricing, sometimes we have what we call in accounting FIFO, first in, first out, and LIFO, last in, last out. First in, first out will give you a higher amount. First in, first out will give you a lower price, but first in, last out will give you a lower price, FIFO and LIFO, And then we talk about depreciation. When you buy assets that you use, the plant and machinery and the rest of them, over time, they are working and engaged in their wear and tear. They will be written off along the line. So companies will make depreciation. That's money set aside for the replacement of that particular asset. Now, depreciation, it could be on straight line basis. That is, you have an even amount you're putting aside, maybe 50 million every year for the replacement of the equipment. But some we want to put a higher amount at the beginning and subsequently a lower amount. These things, the accounting policy will help. It's important to know this because it's going to help you know the performance. If you're going to read the P&L account, profit and loss account, as well as the balance sheet of the company, that will help determine that. And then we look at the non-operating income. Non-operating income is this. There are companies who are investing in other companies. When they are investing in other companies, they pay them dividend. And this dividend is captured in their, it is a non-operating income. It's not part of this, but is captured as income earned by the particular company. So we must find out how much of the non-operating income that is there in the company's balance sheet is very, very important. Then we look at the tax carryover. Tax carryover is this case. Sometimes companies may pay less tax to governments, and it may be carried over to the next year. In which case, we look at whether adequate provision has been made. If it's not, what is the problem? And then sometimes it's equally possible that they overpay tax and government is supposed to refund them. How much is it and how is it affecting the balance sheet of the company? It's also very important. Then we look at profitability. Then start looking at intrinsic values to find out how profitable the company is. So profitability is also very, very important. I know my time is fast spent, but I've done something on the gross profit margin, net profit margin, and rest of them. So let's leave that one. Then we'll look at dividend policy. Dividend policy is how much is the company paying over time. It could be on constant basis. Most companies pay on constant basis. They don't want to increase it. If they are not sure they cannot sustain it, but if they are sure they can sustain it, it's only then they can pay more dividend. We look at that, we'll find out that this policy. Then capital structure. How much of the money used in doing business is from loan or debt instruments, and how much is equity? That's the common stock. It also determines how much that shareholders in the common stock can be paid over time. Then financial analysis here is how solvent a company is. Being able to meet day-to-day obligations. If somebody supplies equipment and rest, can they pay almost immediately? Are they going to rely on when they sell their inventories? It's also very, very important. The operational efficiency. How have they been able to use their plants and equipment? Because it's going to determine at the end of the day how much money they are going to make. If the plants and equipment are dormant, for instance, plant equipment talking about 15%, then there is a challenge. It's either the company is not efficient or there's some other things wrong. One can look at that one and find out what is going on. But if it's operating at maybe maximum capacity, then we'll be talking about maybe bringing in more equipment to meet the requirements of the company. Then management, no matter what you do, with all we have said so far, if you don't have good management, then you have challenge. The company will not do well. That's why it's important we evaluate management of the company. Now, let's look at when we look at management, in evaluating management, we look at maybe the top management. What are the ages, the experience, and qualification of the top management is very important. There must be a blend of the elderly ones and the younger ones. You must have a blend of it. The same is applicable when you talk about the experience. The younger experience and the older experienced ones. They are also very, very, very important. Then, how diversified are they? Because if you skew them, for instance, those people are just engineers all through without marketers, it's a problem. Or you don't have accountants involved. There must be a blend. Those in engineering, those in accounting, those in marketing, and the rest of them. That's the quality of management you're talking about. That is very, very, that could give you what you want at the end of the day. Now, I may digress a little bit. Recently, Gereku power company, Potato sold it, and the new buyers appointed new set of directors. And I read the profile of the new set of directors. They are mainly from the accounting point of view. These accountant, the rest of them. I did not see anybody who be talking about that is into marketing. I did not see anybody talking about that is so technical. I don't know what the reason, but I don't think it is the best, And then the next one is strategic management. Strategic management, it's a long-term thing. In management, we have strategic management and we have tactical management. Tactical management is a short-term thing. Strategic management is a long-term thing. It will tell you where the company is going. And if it's properly formulated, has it been trickled down the line so that everybody knows where the company is going and be able to assess themselves to find out if they're able to achieve it. If they're not able to, they may go back to drawing board to look at a few things and find out what the problem is. And then developed follow South marketing strategy. Well, it's still part of management, but this time around, it's skewed towards marketing. It's also very critical importance because if you don't have a sound marketing strategy, you probably may have problems with what you are doing. And then let us look at labor. No matter what we do, your relationship with labor is very important. Are those working for you, are they happy? Are they prepared to make a career there? Or do you have high turnover rates? Is a problem. If they are not happy, they may not be able to put in their best. And you need them to succeed. So labor relation is very, very important. Then public relation, how does the public view your company? It is important. You address so many things. I'll give you an example. If you look at Dangote refinery, people are talking about you as monopoly, 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 and all those kind of things. So the public may not be comfortable with them. Maybe one of the reasons why they have decided to list, so that Nigerians will see it, the company not belonging to Dangote alone, but belonging to all of us. That's why they want to. One of the reasons why I think they want to list. Then the board of directors. Finally, the board of directors is also very important. They usually, aside any annual report, the quoted companies, you have board of directors there. Board of directors, what are they made of? Academic qualification, experience, exposure over time, and the rest of, because they are going to influence mainly strategic management. The top echelon of the management, senior management will always report to the board of directors. So the quality, the nature of board of directors is also very, very, very important. I think my time is almost up. Okay, I may take some questions if you don't mind. And then finally, I might be able to tell you maybe one or two companies you may want to invest in.
All right, thank you so much. So much value tonight. And so quickly, if you have any question before he goes into suggesting and advising companies that you can take advantage of and start acquiring some of their shares. If you have any questions, please can you indicate by raising your digital hands? I would unmute you or permit you to unmute and ask your question. Can we do that, please? Any questions, please? Any questions, please? All right, so I don't think there are questions. So please, can you just go ahead in the next few minutes so we can wrap up and just give us your suggestions on companies we can buy into now.
Okay. I'm going to suggest, it is a suggestion, please take notes. I am going to suggest 3 companies. The first one is Nigerian Stock Exchange Group. Nigerian Stock Exchange Group. The price may look a little bit high, but it will go places. I will encourage anyone to invest in that company. It might surprise to know that the stock exchange is also being listed on the floor of the exchange. Please invest on that. If you can, you make some money off it. Then the second one is Nigerian breweries. Nigerian breweries also will make progress. You make a lot of money if you invest on that. And Nigerian breweries is a little bit cheap. It's about 80 naira, about 82 naira or so. And then we have international breweries. International breweries also go places. And presently selling for about 15 naira. If you invest in these ones, I don't think you will regret them. Thank you.
All right, fantastic. So people, please, you had the suggestion. Take advantage of this training. Take advantage of the suggestion. Buy these shares. All right. I'm sure you know he doesn't work for any of these companies. He's a stockbroker. Buy these shares. So I will be dropping his phone number and the company details, the brokerage firm details on the group. Reach out to him, buy the shares, buy shares, buy shares. I'm already buying, so I'm advising you to buy. Don't work all your life. All right, so Gladys has a question. Let's take that quickly, then we'll bring the call to a close. All right, Ma, you can unmute yourself and ask your question, please.
Good evening, sir.
Good evening.
Hello. Okay, I wanted to
ahead with your question.
Quite recently, a lot of companies or a lot of people, whether they are middlemen, are advertising stock. Once I open my phone, I will see one of them. I send it back, and it's not Zenith that is advertising, but somebody, maybe somebody in his or her platform to advertise. So I don't know how they are. Whether one should really follow such adverts, especially Zenith Bank.
Okay. Okay. Advising you to buy Zenith Bank. Am I correct?
Yeah, she said people are advertising, not Zenith Bank itself, whether it's probably like middlemen or something advertising for you to buy shares. So she wants to know what your take on such things are.
Okay. We have to be careful when it comes from middlemen. We have to be careful. If you want to buy shares, go to a company that is licensed by the Stock Exchange and Security and Exchange Commission to buy shares. Do not go to those middlemen, because if anything happens, you're on your own. Sorry?
Hello, Ma. Your network is poor. We can hardly hear you.
I said, if I want to buy shares now, how do I go about it? How do I reach a broker or somebody that can help me to buy it? You know, because I don't know how to do it.
I think the chairman will give you an answer to that. He has given you an answer before now, but I say he's going to drop something on the platform.
Okay. Yeah.
He's given an answer before now, but I think he will still do it after now.
All right, so everyone, thank you so much. Mr. Fidelis is a licensed stockbroker. I'll be dropping his details on the WhatsApp group. Madam Gladys, please, I'll drop the phone number, the name of the brokerage firm. Please reach out to him, and he would handle everything for you. Zenith is good.
Yes,
I just bought Zenith Bank is good. I just bought Zenith Bank recently. So that's a good buy.
Okay.
All right, people. So we'll be stopping the recording here. Let me go ahead and stop recording.